Well, hi there. Warm welcome. You're watching Times Now's Blueprint Explosive Exclusive, and I'm Meghna Deka. Well, it is the eve of Dhanteras. Diwali is merely in 2 days, and right after that, it is going to be the dawn of the wedding season. The season of celebrations is here, and we Indians love to add a bit of sparkle to our festivities, don't we? Buy gold is the mantra for all of us. Everywhere, there's a huge hype over gold, how it is the best bet this Diwali season, how the prices are spiraling up. Everyone's asking, did you buy gold? Did you buy enough? Did you buy gold bonds? And is that going to be good enough? And why did you miss your chance to buy sovereign gold bonds? That's right. Everywhere, it's Sona hi Sona. And those who didn't buy are getting the great gold FOMO. That's right. Everyone's thinking, did we miss out on the chance to have bought gold today, yesterday, day before, week before, a year before? Well, experts on our show are going to be telling you if this is the right time to buy gold, or is all that glitters not always gold? It may just be a mirage. And why is silver now stealing gold's thunder? All these questions, to buy or not to buy, that is the question, and we'll have answered that question by the end of the show. But let's start by comparing this Dhanteras to the one last year. Now, here are the numbers on your screens. There has been a 68% rise in the price of gold in Dhanteras. On 29th of October 2024, the price of gold was 78,840 rupees per 10 grams. Today, on the 17th of October, Dhanteras, on the eve of Dhanteras, it is 1,32,770 per 10 grams. That's a massive hike that we have seen since last Dhanteras. If you bought gold, well, 68% hike that you can see in your assets. Well, clearly, gold prices are rocketing. They are at an all-time high. Usually, it's the demand around the festive season that pushes the prices up, as we all know. But this time, it isn't just us Indians and our love for the yellow metal, but it's also silver and platinum. That's right. It has been a blend of tradition as well as economics. In fact, watch this. The gold prices, there you have it. We have it broken down for you. The gold prices, silver prices, and the price of platinum. Gold is at 1,32,770 per 10 grams as on 17th of October. Silver comes in at 1,85,000 per kg. And you have platinum, which is around 48,200 per 10 grams. Well, there you have it, a breakup of the three big assets. Now, let's zero in on gold and tell you about its journey. Well, gold, remember, is usually considered as a dead asset because we buy it and we keep it in our lockers. Its value grows, but it doesn't really give us any interest like other investments. People usually queue up to buy gold when there is fear because it is a safe investment. When you buy gold, you have yellow metal in your hand. You can sell it in dire situations, which you can't do if your investment is in your house where you live. Which is why, when you are in fear, when fear grips your mind, you are going to be inclining towards buying something that you physically have in your hand. Now, watch the journey of gold prices since the year 2000, and you'll see how it has been going up again and again. At 2000, it was about 4,400 rupees per 10 grams. It went up to 7,000 in 2005. And 10 years later, it was up to 18,500. And then 2015, it was 26,000. Then 2020, it was 48,650. And now look at the huge spike that we have seen, where it's about 1,32,770 as on 17th of October for merely 10 grams of gold. So look at the way it has been coming up, which is why many have said Indians who have always generationally collected gold stand to actually benefit at this time. But the question is, why is gold on fire? Well, gold usually is considered, as we were telling you, a dead asset. We are keeping it inside. It's not like any other investment. People usually are queuing up to buy gold during fear, as I was telling you. So what is the fear that everyone is fueling right now, this gold rush? Well, the sharp rise in bullion prices reflect the growing investor appetite that we have seen for safe haven assets as global tensions have been rising. Remember, there are ongoing wars and there is no sight to the wars that we have seen. In fact, there is a Gaza peace pact which is in place. But the question is, will it really last? Yes, these wars continue till date. Of course, there is the Ukraine war. Trump and Putin have spoken to each other recently, but there is still no ceasefire in sight. Then there are Trump's tariffs. Market analysts are pointing to fears around the US economy as well. There is rising trade disputes that we have seen between US, India, China. And there are visible signs of stress in the financial system due to Trump's tariffs. No one knows which is going to come up next. Literally don't know what next in Trumpistan. Hence, central banks in countries such as India, in China, in Russia, in Turkey, as well as Poland, interestingly, have become big buyers of gold. Of course, they've always bought gold, but they now have increased their appetite for gold. They used to buy somewhere around 400 to 500 tons of gold. Now they are buying about 1,000 tons of gold annually. Let those figures sink in. Well, India's central bank, the RBI, has bought a record 57.5 tons of gold in the past year alone. Our reserves are currently at 880 tons. The reason behind this frenzy is a fear and anxiety for what next in global economy. But of course, Indian markets, well, they are witnessing very strong physical demand as well. And that comes down directly to the fact that it's Dhanteras, that it's Diwali, that it is also the wedding season which is going to get kicked off. Which is why traditionally, as we have seen, as auspicious occasions come in, we all Indians tend to buy gold and silver. Now, this is what has really led to the wedding season getting kicked off. And now there is a huge spike in the demand for gold, which is also increasing. And this is a domestic reason. The prices, however, and it's important for us to point it out, that it's important that the prices may correct after the festive period. So beware for all of those who want to now quickly buy gold. But an interesting thing that we've seen are the trends of silver. Well, silver, remember, is often called the poor man's gold. Those who missed the gold rally are now turning to silver. So why is silver now outperforming even the bull run of gold? Well, gold is primarily a store of value. It has limited industrial use. But silver, on the other hand, it has broader industrial applications as well. Remember, specifically in electronics and renewable energy. This leads to a higher overall demand for silver. Both of them are, of course, less supply, more demand, but more so when it comes to silver because it also has industrial demand. Now, let's get you the 5 nations where gold is cheaper than in India. After all, you can always explore ways to go out, buy gold through authorized channels or else during international trips. Due to this, you may get that price edge. The first place, as everyone knows, is of course Dubai. This is India's rate, and we are going to show you the 5 nations where it's going to be much cheaper than India to buy gold. Let's start with Dubai. As we all know, Dubai is widely known as a gold shopping paradise because of its minimal taxes and import duties. In fact, in October 2025, this month, gold costs somewhere around 1,14,740 rupees per 10 grams. Now, this is because of Dubai's strategic location as a trade hub and, of course, its government's low taxation policies, which keeps its gold prices competitive and very attractive. The second nation that you can consider buying gold from is United States. Well, in United States, it's roughly around 1,15,360 per 10 grams. Now remember, The US market benefits from a large volume of trade and balanced taxation policies. Currency strength and strict regulation also contributes to relatively stable and accessible gold prices. Third nation, Singapore. Well, Singapore's gold prices are less due to tax exemptions on precious metals. The price stands somewhere around 1,18,880 rupees per 10 grams. This city-state is known to be the best place for a combination of both competitive pricing as well as trusted certification. Then there is Hong Kong. The gold market benefits here from low import duties and a high volume of gold trading, which results in prices which is nearly 1,13,140 rupees per 10 grams. Finally, there's Turkey. The gold price here is about 1,13,040 rupees per 10 grams. This is cheaper than India. As you can see very clearly, much cheaper than India. So this country has a strong tradition, remember, of gold jewelry and investment. But it is lower tax rates which helps keep the cost of gold down in Turkey. But here's an important difference between Indian markets and the Turkish markets. Remember, Turkish gold markets are comparatively less affected by the import tariffs that India has seen. Remember, 50% Trump tariffs have been imposed on us. So the price involvements that we have seen, the price movements, are going to continue to depend on global and domestic developments that are absolutely humanly impossible to predict right now. However, if current tailwinds persist, prices may possibly hit uncharted territory. In India, while we measure gold in tola or 10 grams, globally, remember, gold is measured in ounces, which is why, just to give you a bit of an idea, 1 ounce is roughly equivalent to about 31 grams or 30 grams also. You can do a simpler math. So let's get you the projections which are coming in for gold by different estimates. You have the ANZ. What do they say? They say that by June 2026, mid-year next year, the projection for gold is around $4,600 per ounce. Then you have Goldman Sachs. What's their projection? Well, their projection is for the end of next year, 2026. They are saying that gold is likely to hit $5,000 per ounce, $5,000 per ounce, and that's going to be a huge number to have hit, because it is actually considered to be something of a mental barrier as well. $5,000 per ounce. JP Morgan says that by 2029, it's likely to even hit $6,000 per ounce. Astronomical numbers. Should we fall for it? Well, let's round it all up. Let's tell you what the experts are saying, because don't say we didn't warn you. Experts are saying, and this is good advice coming in, that 1 year's performance of gold or any other such asset like silver is not a guarantee of future returns on that kind of an asset. Remember, gold and silver, both of them have historically seen extended periods of flat or negative performances as well. It's important for us to remember that. So experts suggest that investors should avoid chasing the recent winners. So what should you do? Should you buy? Should you not buy? Well, the advice is adopt a balanced allocation approach. Now remember, every asset class moves in cycles, which is why be cautious, but you must know your facts. Let me go across to our panelists. Today, joining us on the show, we have Nitin Khandelwal, the past president of All India Gem and Jewelry Domestic Council. Also, Dr. P.K. Basu is joining us, an economist. Welcome to the show. I'm going to start first with Nitin Khandelwal. Mr. Khandelwal, everyone seems to be gripped by FOMO. There's so much of hype around gold, now around silver, to buy or not to buy. That is the question. What about those people who seem to have missed the bus, who haven't been able to buy gold? What should they be doing today? Nitin Khandelwal, I believe you're on mute. If you can just unmute yourself.
First of all, I would like to give the best wishes for the Diwali and Dhanteras to all the viewers. Gold is never missed the bus because gold was never cheap in entire life. I am in business from last 48 years, but I never see gold is in the cheaper price. Gold is always costly, and that is the main attraction of the gold, that it is going to costly every year. So that is for sure.
Oh, that's very interesting. In that case, Dr. Basu, do you concur with him? Is the hype worth buying gold, even though the fact is true that it is a bull run that we have seen? Should we be buying it now?
Well, it's never such a good idea to chase a trend like this for the simple reason that in India, for instance, inflation is low and likely to moderate further. So there's one good reason for buying gold is to hedge against inflation. And in India, that argument does not hold at all currently. Inflation is low and going to be moderating further as we go forward. So the only speculative reason to buy gold is because central banks are buying it, because they are trying to diversify away from the US dollar. Most of the other currencies also have several unattractive features, and so so central banks are diversifying more into gold. Another thing that is happening is that there is a lot of global uncertainty and an apprehension that globally inflation, especially in the US, could go up. And so there is some good reason for some speculative demand for gold. But generally speaking, in September, we saw a huge amount of imports of gold and silver into India. That is primarily because of the festive season ahead. So I wish your viewers a happy Shubh Diwali and Dhanteras. But post the festive season, I think there will be a moderation in demand for gold as well. Well, not a very serious correction, because globally, of course, there is reason for gold prices to stay fairly firm. I don't agree with these forecasts of a big increase to $6,000 per ounce and $5,000 per ounce. I think those are rather excessive forecasts. But the important thing to understand about gold is if you buy gold for festive reasons, for wearing at weddings and so on, that's fine. But if you are buying gold for a pure speculative purpose, then I think it's important to understand that gold does not give any returns apart from capital gains. There's no interest rate. So other. But interestingly,
there is this trend which we've seen in India.
Give you better returns.
The amount of gold jewelry, the purchase of gold jewelry has been decreasing. It is actually buying of gold bonds that seems to have increased, because absolute physical gold, there is a decline in that. Now, Mr. Khandelwal, I'm going to come across to you, because let's also talk about silver. We've seen a huge surge in the demand for silver. Is it stealing gold's thunder? Everyone is saying that it's poor man's gold. So if a person is unable to buy gold, we've seen how high the prices is silver a good option?
See, silver is playing the multiple roles. One, the important role is the ornament and artifacts, and another is the industrial demand. And the gold rate are supporting also to the silver. And everybody is aware that the import of the silver in India is increased by fourfold. That is more than 7,000 tons in a year. Previously, it was 2,500 tons only. So day by day, there are so many showrooms opening for the, especially on the silver. It was not previously happened. So
Absolutely.
Gold is, according to Robert Kiyosaki, silver is going to be the $500 per ounce. And now it is only 52 to 54. So long away to go for the silver. But the one thing is about the silver is a very speculative, and it is very risky to enter in this market. But for the long term, you can believe in the silver also, because industrial demand is increasing. There is a semiconductor sale is increasing. Then the EV cars is requiring, and there are people are investing in the silver and gold. Because if you see the China, every morning you see the $50 increments in the gold and at least $1 or $2 in the silver. Because China consistently buying gold and silver because they don't believe in the US government, whether in the US currency also. And if you see the globally, every bank, every central bank is
All the
buying
central
continuously silver.
Including
all
India.
central banks of the world. And particularly in the India also. So if you see the physical demand, you see the electronic demand, you see the industrial demand, and the best part is a 6% deficit in the manufacturing also. Because there is no direct mining for the silver. The silver is a byproduct of the copper. So silver, I think, is unbeatable in coming days.
So gold is always good, but silver is now fast catching up. Well, we are unfortunately running out of time, but I think that's very great advice, Mr. Khandelwal, that you've given, and Dr. P.K. Basu has explained to us, because at the end of it, as we all know, every asset, remember, every asset class will be moving in cycles. So I believe the mantra will be to adopt a balanced allocation approach. Perhaps that both of us, all three of us can agree with. We'll leave it with there. Thank you so much for joining us, gentlemen. With that, a short break. I'll return in 2 minutes.